We're going to continue our Accounting 101 discussion and maybe backtrack a little just for the purposes of review. So we have all of our journal entries made, but now we're kind of at the stage of putting them into T accounts to show how the debits and credits impact each of the individual GL accounts. So since we've already kind of gone through this once in a previous session, so we'll just kind of quickly go through it here for review. Okay, so each of these entries basically have a debit and a credit. That will kind of start off with each of our entries. So the revenue and the cash for the cash sale. Kind of go through each of these going forward, debit and credit into various accounts. And this process happens behind the scenes, fortunately, so we don't have to do these manually. Although that's how it was done 20 years ago. This was being done essentially on paper before computers were around. So the basic idea is that once all of these accounts have received their proper entries, then the net of those accounts show up in the trial balance. The trial balance by itself is kind of a boring report, but it's actually pretty important because it shows all of the detail and all of the impacts for all the accounts. So every so often, you'll see people take the trial balance and then from the trial balance, use it to create the financial statements. You don't see it too much these days because computers do a pretty good job of creating financial statements from the trial balance. But so often, someone will just take an Excel spreadsheet of the trial balance and then plop it into a P&L and balance sheet, and that's what they do every month. All right, so speaking of financial statements, so once you have the trial balance squared away, then the system, whatever it is, it could be QuickBooks or it could be something on Microsoft Dynamics or something on Infor. They do very similar things. So the idea is to go and get those numbers off the trial balance and get them into the income statement and the balance sheet in the proper places. So first is revenue. And one of the formulas that we kind of discussed previously was that on the income statement, the net income is equal to the revenue less the cost of goods sold, less the G&A, and I guess less the sales and marketing expense. So fundamentally, revenue less expenses is net income. Generally in income statements, you see revenue and cost of sales. So if it were software, for example, you might charge $100 for software, but the cost of goods sold might be $75. So that's kind of typical. So in our case, our example, we had revenue of $300 and cost of goods sold of $150. In general, the next thing that pops up in a financial statement, the income statement, is the gross profit. So this number is actually pretty important. So the revenue number and the gross profit number are pretty important numbers when it comes down to financial analysis. We talked about G&A before. So in this case, we have some telephone expense. We have net income of 125. So in a typical financial statement, it'll be much more complex than just having one telephone expense. You could also have some sales and marketing expense in there as well that you might track separately. But for our purposes, for Accounting 101, we'll just kind of indicate that the net income is 125. The balance sheet follows suit very similarly, so that the numbers that are in the trial balance also end up on the balance sheet. So cash of 1,075. Receivables of 100, inventory of 50. So the total assets is 1,225. From a liabilities perspective, we have something left over in AP that we still needs to be paid for $100. The credit card suspense account is 0. And the difference essentially that we kind of saw very early on is that equity or capital is equal to the assets minus the liabilities. So in this case, we have shareholder capital that we began with at $1,000 at the very beginning. Nothing was distributed to the shareholders in this example. Retained earnings is 0, and the net income is 125. And basically, the idea behind these two is that the total of the assets plus the equity is 1,025, which matches to the assets of 1,225. So that was our basic equation for the balance sheet, that the assets need to equal the equities plus the liabilities. Okay, so any questions about this process?
No.
Okay, luckily the system kind of handles it all for us, so you don't have to do a lot of work in terms of getting the trial balance into the right places on the balance sheet. Just have to worry about getting the entries into the system correctly so that the financial statements come out correctly. Okay, this will do it for our Accounting 101 discussion.